I think there's four reasons to be interested about the big oils as they emerge out of this crisis. First of all, they are taking advantage of the difficult situation by really restructuring the cost positioning of their businesses. By lowering the cash costs, we've seen whether a lot of these companies are really completely rethinking the structure of their businesses, particularly in oil and gas, with major new cost-cutting programs. The write-offs also mean lower depreciation for the future, which means higher earnings. They are also accelerating the energy transition with both a fall in the oil and gas capex and an increase in the focus on renewables that we estimate will bring renewables above 10% of their capex from next year. And then finally, all of the capital efficiency in oil and gas, we believe, will lead to a much better outlook for oil and gas supply in the future, and ultimately higher returns and higher oil and gas prices. Oil and gas is becoming effectively structurally underinvested in the age of climate change.
I hear you, Michele, but I just wonder if there is a metaphor coming from the auto industry, which is failing ignominiously at the moment, certain notable exceptions, to make the transition to cleaner fuel, to electric vehicles as well, from ICE as well. And that sector trades at an even bigger discount to the oil sector as well. So is there a trap? Is there a metaphor, a lesson from other sectors of what could happen in the energy sector?
Yes, there is. I think there's two differences with autos. First of all, the auto sector is driven by sales, while the oil demand is driven by the stock of cars on the road. So the energy transition is reflected later in oil demand than in auto sales. And secondly, I think oil and gas has an underlying decline rate, which makes the supply much tighter than it does in the auto sector. But is there a comparable? I think there is. I think the comparable to the big oils is big tobacco at the end of the 90s, when the ban on tobacco advertising was seen as a very negative event on the sector, but actually it led to consolidation, to cost cutting, and ultimately to better earnings and better share price performance. And I think the tightening of financing conditions in oil and gas that come with the pressure on climate change will achieve a similar impact on a very different sector that is the big oils.